Barrick Mining Corporation has undergone structural evolution since the 2019 merger with Randgold Resources, characterized by an adherence to a Tier 1 asset strategy and an expansion into the copper sector. As of early 2026, Barrick maintains a portfolio anchored by 6 such Tier 1 assets, supplemented by a growth pipeline that includes some of the most significant mineral discoveries of the 21st century. Assets, reserves, and resource analysis. The cornerstone of Barrick's valuation is its high-quality mineral reserve base. At the end of 2024, Barrick reported attributable, proven, and probable gold reserves of 89 million ounces at an average grade of 0.99 grams per ton. This represents a 23% increase over the 77 million ounces reported in 2023. The substantial growth was primarily driven by the conversion of resources to reserves at the Reko Diq copper-gold project in Pakistan, which added 13 million ounces at 0.28 grams per ton. Copper reserves more than tripled in 2024, growing by 224% to 18 million tons at an average grade of 0.45%.
Operational analysis. North American Theater. North America is the primary production hub for Barrick, anchored by the Nevada Gold Mines (NGM) joint venture and the Pueblo Viejo mine in the Dominican Republic. NGM produced 1.65 million attributable ounces in 2024, with all-in sustaining costs of $1,561 per ounce. For 2025, guidance for NGM is set between 1.54 and 1.70 million ounces at an AISC of $1,460 to $1,560 per ounce. The Cortez and Turquoise Ridge complexes performed well in the third quarter of 2025, increasing production by 15% and 13% respectively over the previous quarter. Gold Rush is currently ramping up and is expected to reach a targeted annual production of 400,000 ounces by 2028. The wholly owned 4 Mile project, which features grades double those of Gold Rush, is anticipated to attain Tier 1 status upon future incorporation into the joint venture. Pueblo Viejo achieved record high throughput in the third quarter of 2025, following the resolution of commissioning issues in the plant expansion project. Operational analysis. Africa and Middle East. The Africa and Middle East region remains the highest margin segment of the Barrick portfolio. In 2024, the region produced approximately 1.3 million attributable ounces. Kibali, a 45% owned joint venture in the Democratic Republic of Congo, produced 309,000 attributable ounces in 2024 and continues to benefit from its integrated hydroelectric power supply.
Loulo-Gounkoto in Mali produced 578,000 attributable ounces in 2024. Despite a period of provisional administration in 2025 due to a dispute with the Malian government, the corporation announced a comprehensive resolution in November 2025, restoring full operational control. The Bulyanhulu and North Mara mines in Tanzania have seen a significant turnaround, with Bulyanhulu replacing more than 180% of its depleted reserves in 2024. The Jabal Sayid mine in Saudi Arabia produced 32,000 tons of copper in 2024. Growth Pipeline Analysis 2026-2030. Barrick has established an organic growth trajectory that aims for a 30% increase in gold equivalent ounce GEO production by 2029, all supported by existing reserves and resources. This growth is anchored by transformational copper projects and the high-grade expansion of core gold assets. The strategy emphasizes the development of Tier 1 assets, mines that can deliver at least 500,000 ounces of gold or 200,000 tons of copper annually for over 10 years in the lower half of the cost curve.
Tier 1 copper expansion. Lumwana and Reko Diq. The strategic copper pivot is driven by 2 assets intended to position Barrick as a major global copper producer. The Lumwana Super Pit expansion in Zambia is a $2 billion project that aims to double the mine's annual throughput from 27 million tons to 52 million tons. Construction is scheduled to start in late 2025, with commissioning of the new process plant circuit planned for the second half of 2027. This expansion is expected to elevate annual copper production to a life-of-mine average of 240,000 tons starting in 2028, extending the mine life to over 30 years. The Reko Diq project in Pakistan, one of the largest undeveloped copper-gold deposits globally, is another cornerstone of the 2029 growth target. Following the completion of feasibility studies in late 2024 and the approval of a $7.7 billion investment package, on-site construction is accelerating in 2025. The project is designed in two phases. Phase 1 will target first production in late 2028 with an ore processing capacity of 45 million tons per annum, while Phase 2 is planned to double this capacity to 90 million tons by 2034. The project has already secured significant financing, including $700 million from the IFC and IDA, and is projected to generate over $70 billion in free cash flow over its 37-year life.
North American gold growth, Gold Rush and 4 Mile. In Nevada, the ramp-up of the Gold Rush mine is a critical near-term milestone. Gold Rush is expected to reach its targeted annual production of 400,000 ounces by 2028. Immediately adjacent to Gold Rush is the wholly owned 4 Mile project, which is arguably the most significant gold discovery of the century. 4 Mile features ore grades double those of Gold Rush, with current resource estimates showing 6.4 million inferred ounces at 14.1 grams per ton. The development timeline for 4 Mile involves a drilling campaign in 2026, with plans to complete 120 kilometers of directional surface drilling. A preliminary economic assessment, PEA, suggests the mine could produce between 600,000 and 750,000 ounces of gold per year. Key milestones include the start of pre-feasibility study drilling in early 2025 and the planned construction of the Bullion Hill Exploration Decline portal in 2026. By 2029, Barrick plans to connect 4 Mile with the Gold Rush underground development via 34 kilometers of infrastructure. Optimization of existing Tier 1 assets. Beyond new projects, Barrick is expanding its existing flagship operations. The Pueblo Viejo plant expansion in the Dominican Republic is designed to maintain average annual gold production above 800,000 ounces through 2030.
A key operational milestone for this asset is achieving a throughput of 12.8 million tons per annum by 2026. The construction of the Naranjo Tailings Storage Facility is currently in the execution phase, a vital step to support processing until 2049, as the existing facility is expected to reach capacity by 2027. In Africa, the Kibali mine is focusing on higher grades and the implementation of a new solar power project to further optimize its low-cost structure. Financial Performance Review 2024-2025. The fiscal year 2024 marked a transformative period for Barrick, with net earnings increasing by 69% to $2.14 billion, the highest level recorded in over a decade. This performance was driven by a combination of resilient production and a significant appreciation in realized commodity prices. Adjusted net earnings for 2024 rose 51% to $2.21 billion, while attributable EBITDA climbed 30% to $5.19 billion.
The momentum carried into 2025, with the second quarter delivering record adjusted earnings per share of $0.47, marking the highest level since 2013. By the third quarter of 2025, the corporation reported a 23% year-over-year increase in revenue to $4.1 billion, supported by realized gold prices that reached historical peaks. In terms of specific annual trajectories, revenue grew from $11.4 billion in 2023 to $12 billion in 2024, with the trailing 12-month figure reaching $14.6 billion by the end of the third quarter of 2025. Net earnings followed a similar trend, rising from $1.27 billion in 2023 to $2.14 billion in 2024, and ultimately hitting $3.58 billion on a trailing 12-month basis by late 2025. Adjusted net earnings showed significant strength, moving from $1.46 billion in 2023 to $2.21 billion in 2024. Attributable EBITDA showed a consistent climb from $4 billion in 2023 to $5.19 billion in 2024, reaching $6.2 billion on a trailing 12-month basis by the third quarter of 2025.
the earnings trajectory has been significantly influenced by the leverage of high commodity prices against a relatively stable cost base. In the second quarter of 2025, Barrick realized an average gold price of $3,295 per ounce compared to $2,344 per ounce in the same period of 2024. This price appreciation translated directly to the bottom line, enabling the company to exceed analyst expectations consistently. Furthermore, the higher average copper price received in 2024 and 2025 has provided an additional layer of profitability, as copper cost of sales per pound declined while production surged at key assets like Lumwana. Cash flow analysis. The conversion of accounting earnings into tangible liquidity is the defining feature of Barrick's recent financial results. For the full year 2024, operating cash flow reached $4.5 billion, a 20% increase over 2023. Free cash flow for the same period more than doubled to $1.32 billion. The third quarter of 2025 represented a pinnacle of cash generation, with operating cash flow surging 82% over the previous quarter to $2.4 billion. Free cash flow for the third quarter reached $1.5 billion, a massive 274% increase compared to the second quarter of 2025. A quarter-by-quarter review of 2025 highlights this acceleration. In the first quarter of 2025, operating cash flow was $1,170 million, which grew to $1,330 million in the second quarter and peaked at $2,400 million in the third quarter.
Capital expenditures remained relatively steady throughout this period, moving from $795 million in the first quarter to $935 million in the second quarter and finishing at $900 million in the third. This resulted in free cash flow of $375 million in the first quarter, $395 million in the second quarter, and a record $1,500 million in the third quarter. The shareholder return component of the cash flow also expanded significantly. Dividend payments rose from $254 million in the first quarter of 2025 to $596 million in the third quarter. Share buybacks were even more aggressive, starting at $143 million in the first quarter, increasing to $268 million in the second quarter, and surging to $589 million in the third quarter. Over the three-year period ending in 2024, Barrick returned a total of $3.5 billion to shareholders. In the first 9 months of 2025 alone, the corporation returned $1.6 billion to shareholders, including $1 billion in share repurchases. Balance sheet and capital structure analysis. Barrick Mining maintains a balance sheet characterized by high liquidity and a conservative leverage profile. As of September 30, 2025, total assets were recorded at $48.4 billion, compared to $48.1 billion at the end of 2024.
The asset base is primarily composed of non-current assets such as property, plant and equipment, and equity method investments, but it also includes $5 billion in total cash and cash equivalents. Total liabilities remain stable at $14.4 billion, consisting of debt, accounts payable, and non-current provisions. The corporation achieved a significant milestone in the third quarter of 2025 by reaching a net cash position of $323 million, a sharp improvement from the net debt position of $655 million at the end of 2024. The total debt remained constant at $4.7 billion throughout 2024 and 2025. Liquidity metrics also remained strong, with a current ratio of 2.94 as of late 2025 and an exceptionally low debt-to-equity ratio of 0.14. This compares favorably to the end of 2024, when the current ratio was 3.21 and the debt-to-equity ratio was 0.19. The debt structure is highly favorable, with no major debt repayments scheduled until 2033. This long-term maturity profile provides Barrick with the financial flexibility to fund its organic project pipeline without the need for high-cost external financing. The deconsolidation of the Loulo-Gounkoto complex in mid-2025 had a technical impact on the balance sheet, but did not impair the underlying fair value of the investment, which was later recognized at fair value. On the liability side, the corporation has successfully reduced its closure liabilities by $1.5 billion, or almost 40% since 2018, through continuous review and optimization of closure projects.
Valuation analysis.
As of January 2026, Barrick Mining appears attractively valued relative to its peers. The trailing 12-month price-to-earnings ratio stands at approximately 17.29, which is lower than the metals and mining industry average of 20.5. The consensus forecast PE for the full fiscal year 2025 is even lower at 16.4. On an enterprise value to EBITDA basis, the TTM multiple is 8.2, but the FY 2025 forecast drops to 5.43, indicating significant expected earnings growth. Comparative valuation multiples reveal different profiles across the industry. Barrick, B, trades at a forward 12-month earnings multiple of 14.28, while Agnico Eagle, AEM, trades at a higher multiple of 17.88. Barrick's price-to-book ratio is 2.1, compared to 1.8 for Newmont and 3.5 for Agnico Eagle. In terms of efficiency, Agnico Eagle's return on equity is higher at 15.6%, compared to Barrick's 9.5% and Newmont's 8.2%. Barrick offers a dividend yield of approximately 1.9%, while Newmont is at 2.1% and Agnico Eagle at 1.0%. A discounted cash flow analysis suggests an intrinsic value per share for Barrick of approximately $53.19 to $62.63 in Canadian currency, representing a modest upside from current trading levels.
Operational risks and challenges. The investment thesis for Barrick Mining is subject to several operational risks. The ramp-up at Pueblo Viejo was slower than planned due to failures in the conveyor system of the plant expansion, though solutions are being implemented with equipment suppliers. Additionally, the construction of the Naranco tailings storage facility faces legal opposition from local rural communities, which has led to constitutional protection actions calling for a halt to construction. The Reko Diq project in Pakistan carries jurisdictional and security risks typical of large-scale developments in emerging markets. Furthermore, the mining industry continues to face potential inflationary pressures on labor and energy costs, which may result in a year-over-year increase in unit costs for 2025. Barrick is mitigating these risks through a shift towards solar and hydroelectric power at major sites like Kibali and Lumwana. Conclusion. Barrick Mining Corporation represents an investment case for those seeking exposure to precious and industrial metals through a high-quality, diversified portfolio. The Tier 1 philosophy has delivered exceptional free cash flow and a record earnings profile. The strategic copper pivot, supported by major projects in Zambia and Pakistan, positions the company to benefit from long-term battery metal demand. Furthermore, the potential newco IPO provides a specific catalyst for value unlocking by highlighting the premium nature of the North American assets. While operational and jurisdictional risks persist, Barrick's robust balance sheet, net cash position, and shareholder return policy provide a solid foundation for long-term value creation.